All right. Good morning, everyone, and welcome back to 22nd November 2017 New York live session. It is 8:30 a.m. Eastern now, and this is your host Harsh. Welcome to you all. If you are with me right now, you'll be watching live, discussing We'll be discussing three chart setups right now that we've been following consistently, and I'll be adding up a few instruments going further as well. Primarily, we discuss about euro, the dollar index. In the metals, we discuss about gold, and going forward, I would like to add Dow Jones and crude oil as well. All right. So if you're you can find these videos after the archives as well if you're not online right now. But let's get started off right now. I think we are facing a fundamental trigger also around these times. But let that be fine. This session will go on for about uh, 20 minutes or so. Maximum. All right, now what you're seeing is a 4-hour chart display of Euro USD right now, and since long it has been forming a potential 5-wave structure. It's not an impulse though, because you see wave 4 entering the territory of wave 1, so it cannot be defined as an impulse, but can certainly be defined as a potential leading diagonal one way, or if not a leading diagonal, at least an ABC corrective drop. The entire drop, can be looked as the first wave. What is seen after that is wave A. We are expecting wave B to terminate. It is either terminated already, or it should go and terminate around a slight lower level 1680. Once that is okay, once that is gone through, it's expected to rally towards 1970-75 odd levels. Right, let's pull out the retracements of the entire drop here. Overall, high probability remains for a Euro USD rally from either current levels or from 1670. Right, so that's the Fibonacci retracements or resistances which are lined up. The first resistance on the way up is going to be at around 1875. There you go. It is followed by 1970-75. I think it's a strong possibility of down Gartley structure under the making. Now, if you allow me to just take 1 minute about what Gartleys are, they normally terminate around a 786% and a 127% combination of the trend and the counter trend, or the 38.2% according to the numbers here in the net dania. But 1.1977 remains a huge possibility or a huge resistance where prices should find a bearish reversal. But we've got about 220 pips to travel. In fact, I would say 300 pips to travel, because we are expecting prices to drop lower first towards 1670-80 levels and then reverse back. All right. So the overall structure, at least for now, at least for some short-term view, seems to be on the higher side. Now we suggest not from this level, but just to go long from around 1.1970. Sorry, 1.167080 levels, right? As always, what we discuss here is purely based on a technical point of view, and it should not be taken as a personal recommendation or solicitation of trade setups. But this is my passion, and that's what I would like to trade myself as well. We are looking to go along around the 16, 70, 80 mark. Let's see if price action is turning out to be in the same way. We'd love to see this blank being filled up in the coming weeks. So stay tuned, brothers. Alright, so that is a euro trade setup. For live trade setups, I would recommend you, if you would like to, as an active trader, please do log in or please do subscribe to my Telegram channel, Japee, where I'll be pushing trade setup with an exact entry, stop, and exit. That's what I'm discussing here as well. But just in case for a trade update, right? Let's look at the other chart now. Dollar index, both of them are normally traveling opposite side. I love this wave count and the wave structure being displayed by both euro and dollar index. For now, the overall boundary which is being worked upon by the dollar index is between 91 and 95 for now. What it says is we are expecting a Gartley, down Gartley. Now there is no certainty that it should drop all the way towards the 61.8% or the 786%, but normally that is what Gartley structures are made of. All right. uh, 9260 is the 61.8% support. Over and above that, you will be also finding a past resistance becoming future support here. So remaining short on the dollar index for now and going forward for maybe a few weeks from now is going to be on a beneficial side. The question remains whether you want to sell, whether you want to go short. Should you go short around this price, or should you wait for some more bit of action on the north side? I would recommend the later part. The only reason is as the boundary being worked upon on the hourly chart is still looking slightly immature. It's still not produced complete. If I do take a retracement of the entire drop between 95.10 and 93.40 and try and extend the counter trend as well. Somewhere around 94.36 or 94.40, if I do take an extension of the entire, it brings a convergence around 94.45, which is very close to 94.48. The 61.8%. So the bottom line remains that till the time the counter trend line, which I'm drawing here, till the time prices remain in the north side of this counter trend line, I think we should expect a rally towards 94.50 and then a continued drop towards 92. Right, so the trade setups in the dollar index could be you might want to sell around 94, sorry, you might want to look to sell around 94.50 mark right here. The risk remains around 95.15 and the target price can be 92.60. Alright brothers, and the next would be gold. Let's understand this wave structure. Actually, it's quite interesting. If we look at the wave count right from 1357 towards 1261, almost 100 points, it has unfolded into 5 waves: 1, 2, 3, 4, and 5. All right. Now that leaves enough room for the downside, because when you have 5, then there's a 3 and then there's a 5. Okay, so most probably the three-wave structure, the three-wave rally is completed around 1306. Prices should remain consistently below 1306, and even I can go a step further and add that 1296 is a good resistance as well. Right, and prices should ideally remain below 1296 as well. Okay, if you are just joining in this session, then you were not taken the shorts. Actually, we went short around 1292, and we are still wanting to remain short. So the overall wave structure indicates that the first wave is ready, second wave is also almost ready. Maximum could be a push or a test of 1306, but gold is good to sell on rallies and not go long right now. It is heading south, or should be heading south, at least towards 1260 or even lower levels going forward. All right, so that is the wave count in gold. It's coming up nicely. If you look at the oscillators as well, let's look at the RSI at 55, and going by the hourly chart, it's the RSI is around 61 already. So prices should find enough resistance around this zone. Also, it is testing and retesting the backside of the trend line, immediate trend line here. Okay, so watch out for this channel line break, and I think once it breaks below 1280 going forward, I think gold should be on its way towards 1270, 1250, and even lower. All right. So all in all, the trade setup in gold is sell on rallies, resistance around 1296, 1306. Place your stop losses above that. Euro want to go long, but not from this level, and dollar index want to go short around 94.50 and up. All right. So that's a short review for this session, and you may want to write for any queries or whatsoever at Japee@yahoo.com. You want to subscribe my Telegram channel for the live trade setups. The Telegram channel is Japee. You may just find out and join. You're most welcome there. And I'm also there on Forex Lens, presenting 2 live sessions, UK and New York. Right, you can also find me over there. Please do subscribe wherever you feel good, and I'll be posting 2 sessions live regularly on YouTube, and going forward we'll be discussing a lot about Elliott waves, during the weekend educational sessions as well. So stay tuned, brothers, and I'll be back again tomorrow, UK live on 3 a.m. Eastern Standard. Until then, thank you again for joining me online here, and please take care and God bless. Goodbye.